Today's video will mostly focus on the prognosis in light of the continued semiconductor shortage, plans for ramping up production in 2 new plants, and updated guidance on the launch of new models like as the Cybertruck that CEO Elon Musk has promised. The company already blew census estimates for vehicle sales and production out of the water in the last 3 months of last year, widening the gap to its closest rival and forcing analysts to start making last-minute revisions to their Q4 forecasts. As a result, last quarter's results are likely to be forgotten. Moreover, business is flourishing and its operations are profitably stable. The days when the EV pioneer could only turn a profit, thanks to the profitable selling of regulation credits to rivals trying to offset the CO2 emissions from their cars' tailpipes, seem to have long since passed. But what does Edward Snowden have to say about the corporation, and what does that mean for Tesla going forward? This movie contains all the information. Now let's get started. Edward Snowden said on Twitter that Tesla shares are still excessively pricey. In response to Tesla CEO Elon Musk's tweet asking the public if he should sell any of his shares, he tweeted this: "It appears that others share Snowden's opinion. Despite the fact that Tesla's market capitalization recently crossed $1 trillion, independent investment research firm New Constructs claims the company is overvalued by almost that much. According to CEO David Traynor, the stock might drop as much as $88 to about $50 per share. Wall Street analysts are starting to increase their estimates for 2022 from roughly 1.3 million to maybe 1.4 million automobiles or more, following an 87% increase in sales to 936,000 vehicles last year." Cap Morgan Stanley stated earlier this month, "We think 2022 is the year where Tesla can begin to perform like a Terra, contending that supply issues rather than demand will determine its volumes. Investing in Tesla has not been easy thus far this year." Due mostly to the worsening macro climate, the stock has dropped by more than a fifth, closing at just 930 on Monday, after surging to 1,200 a share following the release of the Q4 sales numbers. Due to skyrocketing inflation, investors priced in 4 interest rate hikes by the Federal Reserve this year, which has hurt growth businesses. Bulls have attempted to deflect negative parallels to Peloton and Netflix, 2 struggling former market darlings, as well as worries about an impending spike in redemptions for Cathie Wood's ARK Innovation ETF, significant stakeholder in Tesla. Adding more capacity is therefore investors' top priority in order to support Tesla's still remarkably intact growth story. With its Shanghai production reaching record levels and its original Fremont factory in California overflowing, they will be searching for hints regarding the opening of 2 new factories in Texas and Germany. Because of the local government's regulatory delays, the latter has drawn extra attention. Regarding the state of Tesla's futuristic Cybertruck, which was first unveiled in November 2019, Musk will also need to provide clarification. The alleged launch date, which was first announced to occur last year, looks to have been rescheduled yet again, this time for the first quarter of 2019. As a result, Tesla will quite atypically launch later into the market than some of its rivals who have risen to the occasion. Cybertruck reservation holders disheartened by the thought of having to wait an additional year for the Tesla may be enticed by the recent accolades received by the Rivian Ronin, the introduction of the GMC Hummer EV pickup, and the projected arrival of the Ford F-150 Lightning this year. The first red flag appeared in October when Tesla completely deleted the model from its configurator. Most fan sites now predict that a new model at the top end range with 4 motors would replace the entry-level model, which cost $39,900 and had a single motor in order to better compete with the Ronin. What some are referring to as the Model 2 is another important model that supports Tesla's success story. An updated launch schedule for the model was provided to investors during the company's September 2020 Battery Day presentation. The stock market valued Tesla Incorporated at $117 billion in January 2020. The sum has increased to $658 billion by year's end. On October 25, 2021, Tesla's shares then crossed the $1 trillion market cap threshold in less than a year. Investors are perplexed by Tesla's stock price's rapid increase. It raises the question of whether Tesla will be able to maintain its momentum in the wake of the epidemic due to the same causes that drove the company to a $1 trillion valuation during that time. Tesla's climb has been aided by private investors and CEO Elon Musk's tweets, but the Financial Times writes that the company's quick growth is fueled by a complicated web of financial relationships. Following the index's December 2020 inclusion of Tesla's shares, funds have become more exposed to the company's shares and have profited from the stock's rise in value. The business was given a 1.6% weighted when it was added to the SP 500. It provided about 25 of the index's performance in November 2021 when it was weighed at 2.5% of the index at the beginning of the month, comparable to the S&P 500. Tesla represented 4 of the total weighted Russell 1000. Principles become less important in periods of abundance. Tesla has experienced the same thing. Tesla's stock price has increased from about $60 per share to over $1,000 since January 2019. This indicates that a shareholder in Tesla who purchased $1,000 worth of the electric vehicle manufacturer's stock has seen their investment increase 16 times to $16,000. The S&P 500, an index including 500 of the largest publicly traded firms, has returned 9 over the same 3 years, despite the stock appearing to be declining currently. This suggests that during the past 3 years, Tesla has outperformed the market by a factor of more than 17. Tens of billions of dollars have been lost by investors who shorted Tesla's shares, betting that the EV maker's stock would drop in value due to the company's explosive rise. The Austin, Texas-based company that makes electric vehicles is thought by many to be just getting started. ARK Invest CEO Cathie Wood is the most well-known of these Tesla labels. $3,000 per share is Tesla's price target for 2025, according to ARK Invest. In the next 3 years, Tesla's stock price will rise 3 times if ARK's prediction comes to pass. In 2025, that $1,000 that was put in Tesla stock back in 2019 will be worth $50,000. The already amazing valuation of $1 trillion for Tesla is expected to increase to $3 trillion. By contrast, Toyota, the second most valuable car maker in the world, is currently valued at $300 billion. But indications are starting to surface that Elon Musk, the CEO of Tesla, is not one of them. At least not just now. The price of Tesla stock has increased despite Musk's constant protestations that it is too expensive, and it seems that he's come to terms with this fact. Musk's current discontent with Tesla's stock price has more to do with the state of the economy and stock market as a whole than with the success of the electric car firm he founded. One final important subject that could be covered is China. In December, Tesla sold almost 70,000 vehicles to consumers in the biggest EV market in the world. That drove the brand's Q4 global success and was about a third more than their previous record for the month. Investors will want to know how much of it is sustainable, as owners undoubtedly pulled some demand ahead in order to take advantage of the huge Chinese subsidies for electric vehicles as used prior to their reduction in January. That would indicate a lackluster start to the year. A group of engineers founded Tesla in 2003 with the goal of demonstrating that driving an electric vehicle might be faster and more enjoyable than driving a gasoline-powered one. 5 years later, the business unveiled the Roadster, revealing to the world its battery and powertrain technologies, in addition to a planned fleet of electric cars. Additionally, Tesla has introduced scalable solutions for renewable energy generation and storage. According to Tesla, it is imperative that the world transitions away from fossil fuels and toward a zero-emission future as soon as possible. Despite reservations, they will undoubtedly find a way to surprise their rivals and shatter records, considering how far they've come. It's crucial to keep in mind that analyst projections and price estimates for Tesla stock in 5 years may not be accurate while searching for TSLA predictions. The forecasts made by analysts are predicated on doing technical and fundamental analyses of the behavior of the stock. Results in the future are not guaranteed by past performance. So, what are your thoughts on Tesla's future prospects? Please share your thoughts in the comments section.